Think you need to be wealthy to invest in private companies or commercial real estate? That's exactly what Wall Street wants you to believe. The truth is, there's a legal way for anyone to access the same types of investments that billionaires use to build wealth. No million-dollar net worth required, no six-figure income needed, just a brokerage account and a few $100s to start. Most people think investing in businesses means buying stocks like Apple or Amazon. And investing in real estate means buying a rental property. But wealthy people know something different. They invest directly in private companies and commercial properties, things that generate consistent cash flow every single month. The problem is, these investments are usually blocked off from regular people by something called accredited investor requirements. Here's where it gets interesting. Business development companies, or BDCs, and real estate investment trusts, or REITs, give you access to these exact same opportunities. You can invest in portfolios of private businesses or commercial properties with the same ease as buying a regular stock, and many of them pay monthly dividends that put your savings account to shame. Let's talk about the real wealth gap in America. It's not just about how much money people have, it's about access to the investments that actually build wealth. The wealthy invest in private equity, commercial real estate, and direct business lending. The middle class gets mutual funds and savings accounts that barely keep up with inflation. Why does this happen? It's because of something called accredited investor status. To invest in most private companies, private equity funds, or real estate syndications, you need to make over $200,000 a year or have a net worth over $1 million. This isn't just a suggestion, it's enforced by the SEC. The rule was supposed to protect unsophisticated investors. But what it really does is lock out 90% of Americans from the investments that generate the highest returns. Meanwhile, wealthy investors use these same investments to generate passive income and build generational wealth. They invest in private credit, earning 8 to 12% returns. They buy into commercial real estate deals that cash flow every month. They lend money to small businesses and collect interest payments. And the middle class is told to max out their 401k and hope the stock market goes up. This isn't conspiracy theory stuff. Private equity has averaged nearly 14% annual returns over the last 20 years. Venture capital has hit almost 30% annually. Compare that to the S&P 500's average of about 10%. The wealth gap isn't just about starting capital, it's about access to better investments. Here's where business development companies change everything. A BDC is basically a publicly traded private equity fund. It pools money from regular investors and uses it to make loans to small and mid-sized businesses, the kind of businesses that can't get traditional bank loans or aren't big enough for big private equity firms to care about. Congress created BDCs back in 1980 specifically to help small businesses get funding, but they also opened up private company investing to regular people. Here's how it works. A BDC raises capital by selling shares on the stock market. Then it lends that money to private companies. Those companies pay interest on the loans. The BDC collects that interest and is legally required to pay out at least 90% of it to shareholders as dividends. This is the same type of investing that made private equity firms billions, except now you can do it with a few $100 in a regular brokerage account. You're essentially becoming a lender to private businesses, and you collect interest payments in the form of dividends every single month or quarter. Take Main Street Capital as an example. It's one of the most popular BDCs. Main Street lends money to middle-market companies across different industries. Manufacturing, healthcare, business services, you name it. They collect interest on those loans and pay it out to shareholders. As of late 2025, Main Street pays a monthly dividend with a yield around 5 to 6%. That's monthly passive income from private company lending. No accredited investor status required. Real estate investment trusts work the same way, but for real estate. A REIT is a company that owns and operates income-producing properties, office buildings, shopping centers, apartment complexes, warehouses. You get the idea. Like BDCs, REITs are required to pay out at least 90% of their taxable income as dividends to shareholders. This is huge because it gives regular people access to commercial real estate, not your neighbor's rental house. We're talking about the kind of properties that institutional investors and wealthy families use to generate serious cash flow. Properties worth tens or hundreds of millions of dollars. Here's the kicker. You can invest in these properties for the price of a single share. Take Realty Income. It's one of the largest REITs in the world. Realty Income owns over 15,000 commercial properties leased to brands like Walmart, Dollar General, and FedEx. They collect rent every month and pay dividends to shareholders monthly. That's why they call themselves the monthly dividend company. Their dividend yield has been around 5 to 6% for years. Or look at EPR Properties. EPR focuses on experiential real estate. Movie theaters, entertainment venues, casinos, ski resorts. These are properties that generate consistent cash flow. EPR pays monthly dividends with yields often above 6%. You're essentially becoming a commercial landlord without dealing with tenants or property management. So why should you care about BDCs and REITs? Because they give you the same investment opportunities that wealthy people pay high fees to access through private funds, except you can buy them in a regular brokerage account. No accredited investor status, no six-figure minimums, no lockup periods where your money is trapped for years. Let's break down what makes these so powerful. First, high dividend yields. While savings accounts pay under 1% and the S&P 500 averages around 2%, many BDCs and REITs pay 5 to 8% or more. That's real cash flow hitting your account every month or quarter. Second, access to private markets. BDCs let you invest in private companies. REITs let you invest in commercial real estate. These are asset classes that used to require wealth and connections. Now they're available to anyone with a brokerage account. Third, diversification. When you buy a BDC or REIT, you're not betting on one company or one property. You're investing in a portfolio. Main Street Capital has investments in over 200 companies. Realty Income owns over 15,000 properties. That's instant diversification across industries and locations. Fourth, liquidity. Unlike private equity or direct real estate investing, you can sell BDC and REIT shares anytime the market is open. No waiting years for an exit, no trying to find a buyer for a property. You have full control over your money. Let's look at specific examples you can buy right now. Main Street Capital, ticker MAIN. This BDC focuses on lending to lower middle market companies. They have a strong track record of consistent dividends and their portfolio is diversified across industries. Main Street pays monthly dividends plus special supplemental dividends throughout the year. Gain Capital, ticker GAIN. Another BDC that focuses on lending to small and mid-sized businesses. GAIN has consistently paid high dividends to shareholders and focuses on secured lending, which means lower risk. Realty Income, ticker O. One of the most popular REITs for good reason. Over 15,000 properties, monthly dividends, a track record of raising dividends for over 25 years straight. Realty Income has increased its monthly dividend 131 times since going public in 1993. That's the kind of consistency wealthy investors look for. EPR Properties, ticker EPR. This REIT specializes in experiential properties. Their portfolio includes movie theaters, entertainment venues, and attractions. EPR pays monthly dividends with a yield typically above 6%. They've raised their dividend over 3% in the past year, even through economic uncertainty. You can buy any of these with a few $100s. No special requirements, no accredited investor status. Just open a brokerage account and start investing like the wealthy do. Here's your action plan to start investing in BDCs and REITs today. Step 1. Open a brokerage account if you don't have one. Fidelity, Charles Schwab, or any major broker works fine. Most have no account minimums and no commission fees on stock trades. Step 2. Research BDCs and REITs that match your goals. Look at dividend yield, but also look at dividend sustainability. A 10% yield means nothing if the company cuts the dividend next year. Check the company's track record. How long have they been paying dividends? Have they increased or decreased over time? Look at their portfolio. For BDCs, what types of companies do they lend to? For REITs, what properties do they own? Step 3. Start small and diversify. Don't put all your money into one BDC or REIT. Buy shares of 2 or 3 to start, maybe one BDC and 1 or 2 REITs. This gives you exposure to both private lending and real estate. Step 4. Reinvest your dividends. Most brokers let you automatically reinvest dividends to buy more shares. This is how you compound your wealth over time. Every dividend payment buys more shares. Those shares generate more dividends, and the cycle continues. Step 5. Be patient. BDCs and REITs aren't get-rich-quick schemes. They're wealth-building tools. The power comes from consistent dividend payments over years and decades. Just like wealthy investors use these assets for long-term cash flow, you should too. One more thing. Consider using a tax-advantaged account like an IRA. BDC and REITs dividends are taxed as ordinary income, not qualified dividends. That means they get taxed at your regular income tax rate. Holding them in an IRA lets your dividends grow tax-deferred. You don't need to be wealthy to invest like wealthy people do. BDCs and REITs have opened the door to private company investing and commercial real estate for everyone. The same investments that billionaires use to generate monthly cash flow are available to you right now with no special requirements and no massive minimums. Main Street Capital, Gain Capital, Realty Income, EPR Properties. These aren't complicated hedge funds or exclusive private placements. They're publicly traded companies you can buy with a regular brokerage account. And they pay dividends every single month that put traditional savings accounts to shame. The wealth gap isn't just about money, it's about access to the right investments. Now, you have that access. The question is what you'll do with it. If you want to keep building wealth using strategies the ultra-wealthy actually use, hit that subscribe button. We break down these exact strategies every single week.